Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over together live, put it in the comment section. We'll do that together. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right. Happy, Wednesday? Happy Wednesday, everybody. Right in the middle of another very slow week before the new year and before earnings season starts. Let's look at our open positions. TLT, still in the green on this one, but man, it's really rallying today, so it's moving against us. Remember, we have short call spreads, January expiration for everything right now. Just because of the nature of the market's movements, everything is just straight up like a rocket ship. DIA, Dow Jones, ETF short call spread, down 28 bucks or so. Roku was the roll from December expiration to January expiration. This one's doing fine. We'll see how that plays out. AMD, flat today, down 53. SPY, up slightly. That was a roll as well. IWM and XBI, down. Both short and long strikes are in the money, so we're going to start looking at rolling these either at the end of this week or maybe end of next week. We'll see how it all plays out. Next week should be a pretty volatile week, so I just want to see how things play out first, okay? All right, let's get into it. Not a lot of news at all this morning. Very quiet, but that's to be expected for this time of year. So first up, Affirm. Tried to open an Affirm position yesterday. Didn't get filled. Maybe we can try again today. Same story. Gap up after earnings, mini sell-off, and then just a rocket ship straight up. Cuckoo. Hitting resistance somewhere around 54 or so. So no more January expiration. We're just trading February now for new positions that are being opened. Ooh. Same thing. I think we talked about this yesterday. You'd have to sell the 70, buy the 75. But now that it's up 3% today, these are getting awfully close. As in, I wish there were more strikes available farther out. Like sell the 75, buy the 80. Let's do the math on this one. 271 minus 204 divided by 2 divided by 500. 6.7% if we opened that one and got the win. What's nice about this one is it has great liquidity. 4-cent spread here on the 70. I'll mark this one. I like this one a lot. We'll come back. Okay? Earnings, though. When are earnings on Affirm? February 7th. So we got well over a month till earnings, but if we're going to open up February contracts, this is going to include earnings volatility, so that's why it's so expensive. All right, just keep that in mind. A lot of call skew. On the put side, if you sold the 32.5, you only get 94. If you sold the 70, you get 268. All right. Unity is next. Ticker U. Not sure why. This was in the news this morning. I can't remember why, though. Earnings are at the end of February. Here's our chart. Kind of been range bound for, I don't know, since May of 2022. Some volatility, but not a lot. Could be hitting resistance right around here, 42.5, 49. On the call side, 50's too close to sell, and the 55's too far out to sell. So maybe pass on this one for now. I don't feel comfortable selling the 50. Great liquidity here. 5 cent spread here. 5 here. 4 on the 60. And a lot of open interest too. On the put side, 68 here. You still have call skew on this one. Skip. CYTK. I don't know this one, but I know it's up big today. I think they had a drug get approved or something like that. Heart disease drug. Heart failure drug improves exercise capability. Blah, blah, blah. Heart drug trial results. So there you go. Earnings are at the end of February. Here's our chart up big. Is this an looks like an all-time high as well. Lots of volatility here. A lot of these events are buy the rumor, sell the news. So you want to sell these. And it looks like we don't have enough strikes to sell because everything on the call side's in the money. I don't want to go out to May. Nothing in May anyways. There you go. Close but no cigar. Moving on. Bath and Body Works. Earnings are at the end of February. Don't know if there's any news per se on this one. I know it's been up big. A little bit of volatility too. Look at the move up since end of November. Straight rocket ship up. Catching resistance here from January of this year. Well, we may have missed this one actually. Call side. To a liquid. Not enough volume at all. Okay. Moving on. Nike. Nike had earnings last week. So next earnings are at the end of March. And it wasn't a good report, so it's been down. And it hasn't rallied back at all. So I don't know if I want to sell the put spread yet. Zoom out here a little bit. 82 to 88, 88 to say, yeah, 100. If it gets down to maybe 100, then I sell a put spread. You see we got this lower low, maybe somewhere around 96 to 100-ish. It's hard to say. Because if it hasn't bounced yet, it would have by now. And, yeah. What is interesting, you have these lower highs, lower highs, lower high, lower high, lower high. Higher low, higher low, higher low. It should get a bounce somewhere around 96 to 100. So we're not there yet. We'll keep Nike on the list to follow up on around 100. Okay, next up is Royal Caribbean Cruise Line, RCL. We've traded this one before, and we looked at it yesterday. I didn't write down what we were waiting for, though. Oh, boy. 130. I mean, we're close enough. Earnings are early February. So we have time to get in and out if it moves in our direction. But February expiration includes earnings, okay? Okay, spread here. We got a 6-cent spread here, 7 cents here. That's fine. 145 is a little close. Not bad, though. If you want to take the easy, safe route, you won't get paid for it, but sell the 150 by the 155. 152 minus 96 divided by 2 divided by 500. 5.6. Where's 150 on the chart? $150 is way up here. That would be an all-time high. That one actually seems kind of interesting. We do have Kind of like this one. If we sold 145 and bought 150, what do you get? 234 minus 153 divided by 2 divided by 500. 8% there. Wow. That's why. So, I mean, there's a lot of earnings volatility being priced into these. That's why they're so expensive. I think I'll open this one on the call side, selling the call side, hoping to be out before earnings. If we get closer to earnings, we'll have to play it by ear. I don't know if I'd want to hold during earnings. So sell the 150, buy the 155. I'm going to take the safer route. For what, 5-something percent? 150, 155. Verticals. We're at 5. 150, 155 is right here. We'll go for 62. Selling 1 February expiration to 150 call and buying 1 February 155 call. This is a $500 spread. So all you're risking is 500 minus the 62 credit you're receiving. Limit credit 62. Preview this and we'll double check the ticket. Sell 1 Royal Caribbean 150 call to open. Buy 1 February 155 call to open. Receive a credit 62. Go ahead and send that out. We'll hang tight here. If this one gets filled, 62 divided by 2, we'll set a buy to close order at $31. 31 divided by 500, that's a 6.2% return, okay? Their year-to-date gains have been crazy. Let's go back to the chart really quick. From January 1st this year, 50. They started the year out at $50 a share, and they're at $129. That's over 100% gain. That's cuckoo for Royal Caribbean. Okay? Just this move's been overdone. Should get a pullback, hopefully. I don't know for sure. Moving on. NTES. NetEase. This one's been crazy volatile recently. Down 4% today. Earnings. February 22nd. Great. Oh, that's right. This was the China deal yesterday. I remember this one. Or today. Okay. This one is just too much China exposure, so keep that in mind. Put side for February. Skip. 2 illiquid. Same on the call side. You got 10 cents red here. 2 illiquid. We'll pass on this one. Moving on. Coinbase on a tear. This one's just fun to look at. Earnings are February. Crazy move up. I've wanted to open this one since 150. To 193. 193 to 206. That's the range for a pullback. Or 191-ish maybe. I wish this was more liquid. I'd be in this one in a heartbeat. If you sold 250 and bought 260, you got a 40-cent spread here. Can't do it. Just can't do it. Maybe the put side? Huh? Even worse. There's a lot of call skew, so you're getting paid to sell the call side. On the call side, you'd want to sell the 240, you get paid $817. On the put side, for the same distance, you'd want to sell the 125, you only get $337. So there's a ton of call skew, which means these calls are overbid, overpriced, overvalued. You'd want to sell the call side. But it's too illiquid, so if it continues to move against you as it gets higher and higher up, there's less and less volume, less and less liquidity, which makes it really tough to roll if you're in a pickle. Hurts. Hurts. All right. Unfortunately, moving on. Marathon, same story. Earnings at the end of February. It's all crypto play here. Could catch resistance around anywhere from 30 to around 31.5. If not, the next stop is all the way up to 47. So if it moves past this area right here, it's going to go all the way up to 47. I'm sure the same thing, call skew. Actually, there's so much movement to the upside that there's not enough strikes for February to sell. The 40 is way too close. Put side. The put side, you have to go all the way out to the 12, sell the 12, and buy the... I don't have to buy. It gets so liquid. Look at the spread at the 8. It's the bid is 0 and the ask is 44. There's no volume here. 9, sell 12, buy 9, and you don't get paid for it. That's the problem. Let's just move on. Won't waste our time. Tesla, TSLA, news today. I think they met their quota for sales this year or something like that. And then we had some China news yesterday. Let's take a look. So we had this channel from earlier this year and last year. And now we have this new channel forming here, but it looks like it's breaking out to the upside. So that means you'd want to sell the put side. Earnings. End of January. There's our problem. So earnings are less than a month away. Too close. Too close to earnings. Moving on. Let's take a look at the TLT. We got my position open. Big update today. Opened this, on the 20th or the 21st. Was moving in our direction, almost closed a couple days ago. It's up big today, selling off slightly. Again, like I said yesterday, there's not going to be a lot of moves this week just because there's not a lot of information coming out, no economic data that'll move the commodity market or the dollar or interest rates. So you just kind of have to wait here. I assume for the rest of this week, it's just going to move up and down, sideways. But if you want to open something, I've got January expiration. Sold the 103, bought the 106. At this point, though, I'd move out to February. Skip January. I would sell the 106 and buy the 109. $74 minus 41 divided by 2 divided by 300, 5.5%. Fair, very fair. Put side, if you want to sell the put side. I wouldn't sell the put side. If you did, though, I'd sell 93 and buy 90. 41 minus 18 divided by 2 divided by 300, only 3.8%. So I wouldn't sell the put side. First of all, you don't get paid for it. And second of all, it's had this run up recently from the October low like everything else. So anticipating some sort of pullback. It's coming towards the 200-day moving average. And you've got this descending lower high line. So lower high, lower high, lower high, lower high, anticipating another lower high. And it's hitting resistance somewhere around 100. Resistance could be anywhere between 99 and all the way up to here-ish, which is 102. My strike's 103. I'm fine with that. Right? Yeah, 103 is the short strike for me. Cool. Moving on. Gold. I know gold's up today. Not by much, but still. Like I said, if it hits an all-time high again, I'd be interested in selling the call side. Let me look at futures really quick and then we'll come back. No. So we are not towards an all-time high yet. Going back to GLD really quick. Okay. February on the call side. Not yet though. 200 is too close. The 205 is what you'd have to sell. You might not get paid as well though. 133 minus 79 divided by 2 divided by 500, 5.4% there. I wouldn't do this one today. I'd wait for continued move higher. And just because of the way the strikes are, we've moved from 97, 98, 99, 200. I wish there was like a 201 or a 202 to sell. That's what I'd want to sell. The 200 is too close, and the 205 is too far out to get paid. And same thing, I think we've got call skew here. 200 gets 227. Yeah, lots of call skew. So when you have call skew, that means the calls are more expensive. You want to sell the call side. Okay, and good thing about this, it's very liquid. So if things move against you, you can roll, you can close if you want to close, all up to you. Okay? Not for today though. Next up, we also are looking at Newmont, waiting for it to get to 44. This is a gold play. Earnings are at the end of February. Just chilling out here. I'm waiting for it to get to right here, around 44, 44.5. We've got the descending trend line, the same thing. Interesting. Let's look at the call side really quick on Newmont. If you sold the 47.5 and bought the 50, good liquidity here. That's good. 56 minus 28 divided by 2 divided by 250, 5.6%. That's fair. Next up, the KRE. Checking in on the KRE. I think it's slightly down today, maybe. Huh? Very slightly. We do have bank earnings coming up mid-January. So it's starting to price in that earnings volatility. Even though this is the small regional banks, the big banks start in mid-January. The small and regionals will be right behind them. I'm waiting for it to get to 56-ish. It's going to hit some major resistance between. So you saw it hit, if you go back to January 28th of 2021, it's hit this resistance from way back here and bounced down. The next resistance is 56 and change from July of 2022 and December of 2022. So if it can get up here, it'll hit another major resistance point. 56, that's where I want to sell the call spread, okay? If it moves past that, we've got another major spot at 58. All right? So mark your notes for the KRE sell call spread around 56. All right, that's it for that list. Let's go to our IV rank scanner. Sort by volume. Tesla, we already looked at that. The IWM, Russell, it's moved up. I think December alone, it's been up 14%. To have an ETF index move 14% in 1 month is a little unsustainable. So short term, very overbought. We have our short call spread. We opened very early, back in early December, on December 5th. So this one, both the 197 and the 200 are in the money. We've got 20 some days till expiration, so I'm not worried. And liquidity in this one's very good, so if I need to roll it to February, which you probably will, we'll have plenty of liquidity to do that. So I'm not worried yet. Actually, I'll never be worried, so yet's not the right word. I can always roll. And this is only a $300 spread, so the most you can lose is 300 minus the 20. So the most you can lose is 280 bucks. That's nothing. Okay? If you want to open something today, on the call side, I would sell the 220 and buy the 225. $160 minus 93 divided by 2 divided by 500. 6.7% there. That's a really good deal. I like that one a lot. If I didn't have my January position open, I would totally be in this one today. 220 on the chart. Way up here. Doesn't mean it can't get there. It most certainly can. But that's one parabolic move. The put side, probably have a lot of call skew on this one too. So the call side's paying 158. The put side is paying 143. So actually this is pretty, there's not a lot of call skew. Maybe people are buying puts as coverage. Maybe. If you sold the 188 and bought the 181, so it's a farther out spread. 142 minus, what do I say, 181? 83 divided by 2 divided by 700, or it's 4.2%. So stick with the call side. Marathon we already looked at. Intel, we looked at Intel yesterday. I know it's up big this year. Pass. Coinbase, we already checked that one out. SoFi, too small. We already looked at Cytokinetics. Riot, too small. Microsoft? Microsoft was in the news. I think they're being sued. Let's check it out. Microsoft, who's suing you? New York Times is suing Microsoft. Great. For billions. Earnings are at the end of January. That's too close for us. We're going to move on. That's why. So as we get closer to earnings, we're going to see some increased in IV. Upstart. Meh. Pass. What time are we at? PayPal. Flat. Pfizer. Earnings are at the end of January. We got some time, but Pfizer, it's too small. Gold. We already looked at gold. Bank of America. We have earnings mid-January. I think we said it was the 14th or something. XBI. We're already in this one. I think we sold the 85 and bought the 90, so I think both our strikes are underwater. Let's check it out. It was on a tear. It's been on a tear recently. XBI, yeah, 85.90. Probably roll this one. No earnings on this one. It's an ETF. My January strikes. Yeah, okay. So the 90 is very close to being in the money, off by 40 cents. But we sold the 85 and bought the 90. Again, we've got 23 days till expiration. So by the end of this week, maybe by the end of next week for sure, we'll either roll it if it's still partially in the money. If not, we'll wait and see. Look, we still got great liquidity here. So this one's going to be very easy to roll. The 90 strike has a 1 cent spread. Not worried about that. When we had to roll Roku and tried to roll Boeing, it was just so liquid it made it really hard to roll. That's why liquidity is very important when you open these positions, because if you get into a pickle and you need to roll, the tighter spreads really help with that. Okay? For February, call side, selling 100 and buying 105. This one looks like it's perfectly priced. 103 minus 48 divided by 2 divided by 500, 5.8% there. That's slightly better than what I'm looking for. I'm trying to get 27. $100 on the chart. Way up here. Again, this is February. I think we're like around 50 days till expiration or something like that. So doesn't mean it can't get there. We do have, what's nice on our side is we have lower high, lower high, lower high, lower high, lower high, and maybe lower high. Maybe. I don't know. We'll see. Higher low. Higher low, very slightly. All right, back to the list. We'll do a couple more and then call it for today. XBI. Nope. Bristol Myers. Looked at Bristol Myers the past couple days. They've made 2 acquisitions in the past week. On January 4th, they're going to participate in the 2024 Goldman Sachs Healthcare C-Suite Unscripted Conference. Oh boy. Tune in. Bring your coffee. Earnings for Bristol Myers early February. So we got some time, but February expiration is going to include that earnings volatility. B of A maintains a buy today. How did I miss that one? Lowers price target to 68. That's interesting. Here's our chart. Not a great looking chart. Well, the put side does look interesting. For February, just remember it's going to include earnings volatility, and you don't really get paid for it. You'd have to sell 46 and buy 43. $49 minus 22 divided by 2 divided by 300, 4.5%. Skip that one. ARC. I think we looked at ARC yesterday. I'm going to pass. Next page. We're going to go through this one really fast and then call it. Nope. 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 Citigroup, nope. Netflix. January earnings, great. Once we get into earnings season, we'll have a lot more to talk about every day and hopefully a lot more moves to make. We're in that weird limbo where earnings season now for Q3 is over, and we're waiting for Q4 earnings to start in January. Cool. Moderna, again. They're going to be at the conference too. How exciting. Taiwan Semi. They have an event in January. Monthly sales. Really? TSM. See. Earnings are January 11th. That's why. We'll skip this one. I wanted to look at this one. ARM. Earnings are February 1st. We got a little bit more than a month. This stock as well has been on a tear. Had its IPO earlier this year. That and Instacart we were following a little bit back in September and October. Earnings February 1st, that's right. There's not a lot of chart work you can do here, so you're kind of just using the numbers to figure out both sides. If you sold 90, actually this one's too liquid. Call side, you got a over 15-cent spread. Put side, same. Put side's not bad. It's not great though. Let's skip the put side. I think this has been a good day so far. Royal Caribbean looking for 62. It seems like it's already moving against us. RCL, so it may not get filled today. Yeah. Well, look, I'll leave it open. If there's some late day rally, this may get filled. If it does get filled, set the buy to close, good till canceled order at $31. Okay. If it doesn't get filled, it'll expire worthless. That's fine by me. No big deal there. All right. Thanks so much for watching today, guys. Tune in every morning, 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We go live every morning trading options. Tell your friends who are also trading options as well. Tune in, subscribe, and we'll see you all tomorrow morning.